All right, so I want to start off. What do you make of what we're seeing in the futures? Futures lower across the board as we await for Jay Powell over at Jackson Hole. What's your take on just the market sentiment right now?
I think you hit the nail on the head that we've had a powerful 34% rally in the S&P over the last 4.5 months on the basis of the fact that first quarter, second quarter revenues and earnings much stronger than expected, and an expectation that the Fed's going to start cutting interest rates at the September FOMC meeting. The Powell's keynote speech on Friday is going to be the market's first opportunity to really take his temperature. What is the tone? Is it a hawkish tone? Is it a dovish tone in terms of his read on the slowdown in the economy, the slowdown in the labor market? We've seen a little bit of an uptick in inflation here. And which way is the Fed leaning? If he comes out hawkish, and it seems as if the Fed is not going to begin to cut interest rates at the September 17th FOMC meeting, given this 34% rally you've seen in stocks, that could represent an opportunity for a little indigestion in the market.
So, Phil, by the way, I front ran you a bit. Your word of the day today is Fed. So, obviously, you're very focused on the Fed today. But I want to get to your pick. Your pick for us today is small cap stocks. So, is this a pick based on the idea that we are going to see a dovish Jay Powell that will benefit the small cap sector?
So I'm looking out here over the next 12 to 18 months. We think that regardless of what Powell says on Friday, interest rates are heading lower in between now and the end of next year. Now, the market has been largely driven by the Mag 7 here. The small cap stocks have lagged. We get lower interest rates. That's certainly going to help these companies self-finance themselves and potentially help an M&A and an IPO cycle. Valuations are cheap, particularly in the healthcare and the biotechnology area. We think the fundamentals are very strong, and there's a catch-up trade coming over the next 18 months with lower interest rates.
All right. What do you think about the shift in momentum in the market? We were hitting on it earlier. Look at the Mag 7 down about 2% over the last week or so. Things like the ARK Innovation ETF that were outperforming, pulling back more than 4%. Palantir seems to be emblematic of this entire thing. Previously, and it still may be very close to that, best stock in the S&P, now in correction territory. As an investor, how should you digest all this?
Well, I think you've got to be very cautious about the Mag 7 here. Even though the S&P is up 34%, look at a company like NVIDIA, which has literally doubled over the same period of time. So I'm not sure that I'd be chasing the large cap growth companies. We'd love to see some digestion here, 4 to 8% over the course of the next month or so. That will set up a strong year-end rally, we think, to our 6,500 target, and then ultimately towards the 7,500 level looking out over the next 18 months.